The Headwater Horseman here. It's September the 9th, 2024. First of all, thanks to the sponsors. Let's look at the market. Appears that, well, currencies are going up and down. A broader market seems to be doing well today. Metals are up so far. Crypto is actually up as well. So it's a kind of a risk-on environment, and you can see gold is up less than the industrial metals and silver. Of course, as always, I mean, this has basically no effect on the value of any junior out there. If gold and silver were up or down these amounts, no change at all, because most of these projects won't be in production in, I don't know, the next several years at least. I mean, there are some, obviously it affects the miners on a daily basis, but they can also go down. So I mean, this is just, yeah, okay, a silver miner is getting 1.76% more for their silver produced today, which is, 1/360th of what they're producing a year, and tomorrow it might be down. So, but still, I mean, that's the fascinating thing when you think about it. A silver producer or silver junior, whatever, but even a producer, because they actually get the benefit of the higher price today compared to yesterday. I mean, a silver producer might go up 6% on a day like this, for example. I'm not saying there are many that does that, but that happens. How rational is that? This is just the relative bump from yesterday's prices. And you revalue an entire company with like 10-year mine lives 6% higher because silver went up a bit today. I mean, it really makes no sense, but that's the market for you. That is how stupid the mining sector actually is. It's not what makes sense, it's just what happens. There's someone spamming in I wish I could shut off the volume from CEO, but anyway, I mean, if you think about it, it's crazy, really, because this just means that yes, silver sold today fetches 1.74% higher price than yesterday. That's all it means. Doesn't mean it's going to fetch the same price tomorrow or 2 days after today or anything like that. Still, you can see entire companies, their entire portfolio projects trade up 6%. For juniors, it's even more ridiculous because they're not even in production. So there's like the first evidence you have of, like, I mean, how weird really the mining sector is. Everything is based on sentiment. It affects sentiment, and then therefore it affects prices. But it actually doesn't affect the business values that much. That is a fascinating thing. Just going to start off with some news items out of Sweden, actually. 6 Swedish mining projects have applied for EU's fast track. This is SVT Nyheter, which is a state-sponsored media. And yeah, you can read it yourself. I mean, I have Google translated these. They are in Swedish, but like, and this LKAB, that's the state-owned mining company. The mining giant LKAB is behind 3 out of the 6 Swedish applications to fast-track projects around critical raw materials. I really like this. I mean, Sweden we produce, I read on a recent article, or a comment from Svemin, I think, which said that 70% of the world's underground mining equipment comes from Sweden. It's Sandvik and Epiroc. And then we have Atlas Copco, or maybe I think it was Sandvik and Epiroc. And then we have Atlas Copco and Volvo and stuff that also produce things that goes into mining. And we have the cheapest power cost in Europe. So I mean, as a Swede, I really, really like this. I mean, I think it would be super cool given the very, very long history of mining in Sweden and how much of the world's mining equipment is produced in Sweden if we had kind of a renaissance in mining. I mean, most of the jurisdictions you see out there pretty much are becoming worse, I would say, over the last few years. Sweden is one of few that I see actually appears to be getting better, because I see headlines like this all the time right now. So it's like there are a lot of mining companies in Sweden that are getting aggressive. But that does obviously not mean that, of course there's going to be 6 new mines, critical raw materials, for example. That's not a guarantee, but you get a sense of after the new EU regulations and the fact that we have good geology in Sweden. It's like things are happening, things are starting to happen. If I had to guess, I would think that Sweden is going to be climbing the Fraser Institute rating in the next one already. Really good to see, especially as a First Nordic shareholder. Mind you that First Nordic does not have critical raw materials per se, even though the Barsele project is actually considered to be of national economic interest because it hosts the quote conflict mineral or conflict metal gold. So in Sweden's eyes, it's kind of a critical mineral in a sense, but I don't think it goes under the EU laws of being critical, if you know what I mean, especially given that all the bureaucrats seem to hate gold anyway. But yeah, so First Nordic new presentation out finally. I think this is really an upgrade from the last one. Here you first can see, the Storjuktan Påback in Barsele Klippen project and the now 100% owned Ojärvi greenstone belt. New slide here. You can see Skellefteå VMS belt, and you have the Björkdal mine, the Kankberg mine, the Renström mine, the Kristineberg mine, Svartliden with its production plant, Fäboliden belonging to Dragon Mining. Both of these belong to Dragon Mining. I think Botnia Exploration is here somewhere, and they are the ones that are, I think they might have started trucking ore to Svartliden, so they probably travel over actually First Nordic's ground to put the high-grade ore into the Svartliden plant. So this is a functioning plant, 4 or 5 kilometers away from the Ida target. Greenstone belt scale and endowment. I really like this slide because I really think this, the scale bar, and especially with a zoomed out picture like this, I've seen companies have a very zoomed in view of their projects and it feels massive, and then you look at the scale bar, it's like, it's like 2 kilometers wide, the project. So you have a scale bar, it's like 500 meters or 50 meters or something like that. So I think this really hits home just how massive the project is. This is a 100 kilometer scale bar, and again we have the belt in Finland as well. So if we look here, for example, I think this is the Quebec, Abitibi belt. Obviously this is a thicker belt, but you can see where it's like, there's obviously a trend here in, let's say, the southern part. I don't know if that's mostly because these are not too, these are still underexplored perhaps, but you have a bunch of quite famous mines along a 100 kilometer belt, and so far within this land package, Barsele is the only known multi-million ounce gold deposit. Here you have the big picture geology, and you can see here 7 kilometers of granodiorite. I guess that is the main host rock for the Barsele deposit, and as you can see, here's the Risberget target, for example, and we haven't heard yet if they found anything in their wildcat drilling. Agnico has been drilling and might even still be drilling, and they're probing a bit here and there. Obviously if you put just 1 or 2 holes into any given target, the odds of them hitting a massive discovery hole is pretty low. It would be good if you drill 10,000 meters on any target and get 100 gram meter intercept. So if you just do 1 or 2 holes, we shouldn't expect, even if there might be a massive system somewhere, you wouldn't expect them to hit 100 gram meter holes or anything like that. I'm not expecting that, at least. But just confirming that there's a mineralized system somewhere, for example, that could be a big deal as it is, because you already have this. Anything above that is like, oh, satellite deposit, great. I memean, just increase the mine life of, you know, a production hub here, for example. I really like this new slide where they kind of show the, you know, grade envelopes. I think the previous one, which was more technical, where you saw the wireframes and all that, my sense is that especially retail got the sense that the Barsele mineralization was erratic or something like that. Here you can see that it's basically huge clouds of gold. It's just that some zones are thicker and higher grade, and it's hard to see the actual numbers, but and these are all, as you can see, open along. How many kilometers is this? I don't know. I think this might be, well, we can look at the picture up here. This might be like 3 kilometers. Yeah, I think Avan to Skiråsen is like 3 kilometers maybe. So yeah, wide open at depth. According to the geophysics, infers a continuity of granodiorite host rock to at least 2 kilometers depth. The average depth of the deposit is like 525. So I mean, I would expect that many of these lodes or zones, I should probably put it, because it's a lot of a stacked vein system. That's my impression, at least. It could be continuing past 1.5 kilometers. So I would expect Barsele to grow substantially. It's just that it has not been drilled lower than that. But you can see, you know, some of the deepest drill holes where they hit the lodes. Yes, they come out with good mineralization, and there's some, you know, highlighted ones like 0.4 of 133 grams, 9 meters of 12 grams, 4 meters of 60, 4 meters of 35, 40 meters of 5, 23 meters of 2.6, 1 meters of 6, 4 meters of 5.2, and I mean, this should be highly economic. 4 meters of 5.12, I think the cutoff, what is the cutoff? I mean, depends on bulk. Here we can actually see. 0.5, oh, that's open pit though, but like 1.5 to 1.8. And note that this was using, what was it using? I think it used a $1,300 or $1,400 gold price when they came up with these cutoff grades. Plus, in my opinion, it appears that the cutoff grades are quite, well, the costs, I should say, are quite conservative, the ones that Agnico used. But that's typical of Agnico, apparently. I mean, you put you're very conservative, and then you beat expectations, basically. Because this Mandalay Resources actually had the last quarter, I think, or maybe it was last month, but they mined 1.45 grams per ton from Björkdal, the Björkdal mine, which is east of Barsele, and they had an AISC of like $1,500. So that's like below the Barsele cutoff grade, and they made good money on it, which is remarkable. So I think, depending on how conservative you want to be, I mean, when I raised the cutoff grade or the assumed gold price for the resource to 1,700, not 2,000, but 1,700, all of a sudden the resource stands at 3 million ounces, based on just what's already been drilled. So to me, this is a minimum 3 million ounce deposit, could become, shoot past 5 million ounces with drilling, and then it would literally be kind of a tier 2, tier 1 project. Greenstone belts, depth potential, I mean, yeah, pretty obvious. I mean, we've kind of scratched the surface here. Poor back end bot drilling, that's the discovery, but the slide I really like here, thankfully, they did a slide like this. Let's see here. Gold line belt geochemistry, Barsele versus others. So these are the soil anomalies over Barsele, and here you kind of, you know, circle the arsenic anomaly, for example. There are 4 semi-continuous, and then you have the actual gold zone below that. So it's not following it exactly because there's, you know, the whatever ice flow direction, let's say. So it's kind of, I think that they show here like glacial direction, for example. So it's kind of, maybe this stuff is actually coming from central and just got smeared in a sense. But you see also then how huge the anomalies are here at Harpsund within the Påbäcken project. I mean, I think this is the IDA, and this combined here is Harpsund. You can see how fat this anomaly is. I mean, this is the Borssele anomalies. Harpsund is like wider and longer. And even, I think this is the IDA anomaly, or around the IDA discovery. That's like half of the Borssele anomalies. And then you have Nippas over Storjuktan. That is, I don't know, 5 kilometers long. I mean, these are just huge anomalies. Yes, they are anomalies. But here, this anomaly was smoke that belonged to a minimum 3 million ounce gold system. So is there potential for multi-million ounces at Harpsund and Nippas and IDA? Yes, I think so. Even Taj has said that, you know, he wouldn't be surprised if, you know, or I think he said something like, you know, we can't rule out that there's an even bigger gold system than Borssele within the first Nordic ground. And they are doing even more. This is the view here. They're doing soil geochemistry all over the Storjuktan project. So these are just the anomalies we know so far. And they are absolutely massive. They are on the scale, if not bigger, than the actual anomaly above the Borssele gold deposit. And this is like a tier 2, tier 1 project. So if that's what I think a lot of people are missing, probably. Obviously, Agnico Eagle is not missing, because it wasn't long after they came out with some of these anomalies that Agnico Eagle decided, and that's the second largest gold major in the world, the best one, or highest one in terms of quality, that they took a corporate level stake. Because all of a sudden, I guess they saw that, hey, I mean, Borssele alone, since they're a regional, they say that all the time, we're a regional player. They want to build a mine where they expect to be staying for the next 50 years, let's say. Is Borssele alone going to be big and long-lived enough for Agnico to go into a new country, start a production center in Sweden? Because that's, if you listen to the CEO's interviews, their thing is that they get a production base up and running, they start a mine, and then they want to have that as a base, and then they just grow. So they have a lot of organic growth, and that's how they create a lot of value. They get the production up and running, and then they just explore near the production center. So you could have an operation that lasts for whatever, let's say 50 years, and they have a bunch of satellite deposits and all of that. They don't want to go in, if a junior just owned this, and around somebody else, another major owned it, they would not be interested at all, I think. So I think this is a tip. Them coming into First Nordic is a tip of the hat, that they actually see, hey, this might be a district scale project. This might be they can see the potential for a very long-lived gold camp, basically, and that's what Taj keeps referring to. He believes this is going to be the new gold camp in Europe, or that this part of Sweden is going to be the new hot thing in terms of Western jurisdiction gold camps globally, basically. Because where else are you going to find an underexplored greenstone belt? Yes, you might find that in Canada, obviously. But they tend to be very remote if they're very underexplored. And as they have said, Taj and Adam has said before, if this was Canada, there would be like 8 juniors sharing this entire land package, because in this slide over this 100 kilometer, I don't know how many juniors and majors and mid tiers. You have First Mining, Abcort, Agnico Eagle, Hecla, Falco, IM Gold, Agnico Eagle, Radisson, Probe, O3 Mining, Wesdome. I mean, that's within a stretch of 100 kilometers. You have multiple companies that would be sharing a land package this size if it was in, especially if the more well-known and closer to infrastructure areas of the Canadian greenstone belts. So First Nordic basically owns this entire belt here. So yeah, absolutely huge. I mean, just looking at the footprints, for example, this is multi-million ounce gold potential. Yeah, if we're just looking at the actual footprint and compare that to Barsele, which is not far away. These are not small targets. Any of these, in my opinion, anomalies here would be an absolute flagship target for you could build a junior around. This one, absolutely huge, can build a junior around that. I mean, you look at some juniors when they come out with highlight news, let's say, if they're early stage exploration, and they might be highlighting a 1 kilometer soil anomaly or 2 kilometer soil anomaly. First Nordic has two absolutely massive ones, just that we know of, and I don't know why this has not been circled yet. I don't know if this is a hard part to whatever explore or something, not 100% sure, but they are doing more work, as we can see in the last press release. So the way I look at this, and of course Ojärvi, but you know that already. The way I look at First Nordic, why I like First Nordic so much, why I have a fat stake in First Nordic, is the simple reason, or the simple reason behind that is that I think it's very cheap, just based on the what's already proven. And for example, G Mining, they came out with a PA for the OCO. This is the one they acquired Reunion Gold. I think they bought Reunion for or merge or whatever, took them over. I'm not 100% sure, so don't quote me, but I think it was like $700-800 million or something like that. And this is the PA. Note that it's a PA, so typically they tend to be quite optimistic, but at the same time it was done by G Mining Ventures themselves. They're serious mine builders, so I assume this is a PA that is much better than the average PA. And of course, they are the ones who plan to build this. So I mean, if they put out too optimistic numbers, they're bullshitting themselves in that case. So how does that help them? They're actually planning on building this, not pumping the numbers up in order to get a share price pop or sell it, for example. That's just how I would see things. So it's like, massive production. Like twice the production which I would expect out of Barsele alone, for example. ASIC, this is probably, impressive ASIC. I would say this is, around what I think Barsele would actually come in at. But it's like startup capital, 936 million. And this is in Guyana. This is not in whatever, a Western jurisdiction. And they're still using 5% discount rate after tax NPV at 1,950 base case gold. That is not too low. I use my base case, and of course I might be too optimistic on some parameters, but when I did my Barsele spreadsheet base case, I think I used $1,800 gold or $1,700. I don't actually remember. And for the base case, I think I used $1,800 gold plus did I use a 10% discount rate maybe? And that's in Sweden. So it's like 1.4 billion NPV at $1,950 gold, only 21% IRR. And it cost them 936 million to build it. At face value, this is not a very impressive PA. This just makes me like Barsele even more. Barsele would be probably half or less the capex or let's say half the capex, half the production profile. But it could be, I don't know exactly how big this one is, but it's like I would think similar ASIC. I think Barsele is going to grow to 5 million ounces plus and all that, and in Sweden. So what's 45% of that worth? A heck of a lot more than the current market cap of First Nordic, which is $81 million. And then you have, as a free bonus, this, I mean, reminds me of, I try to remember the quote by Pierre Lassonde, you give me free optionality and I'll make you a millionaire. Because what's the risk here? What if they miss at Harpsund? What happens? Does anything happen to Barsele? No. If they miss at Nippas, does anything happen to Barsele? No. The gold is still there. It's probably going to be in my opinion, I think it's going to be 5 million plus at the end of the day, maybe more. So that's at face value, it's kind of like risk-free upside. And this is not small time upside. These anomalies are huge. In a typical exploration scenario, if a junior only had these targets, there's obviously the risk that they won't find anything, have nothing of value. So even if they started off cheap, let's say the company was valued at 20 million and they miss, they find nothing. For some reason, these fat Pathfinder anomalies, whatever, there's nothing there. Then even $20 million, which look cheap in light of these anomalies, at the end of the day, that would be overvalued because there was nothing there. But given that we already know this, and First Nordic owns 45% of this, and the entire Barsele project, this is just a small inset of the actual larger Barsele project, I'm taking no valuation risk. I mean, if First Nordic now in Q1, I think they're going to drill Ida, for example. If they spent next year spending $4 million drilling Harpsund, Nippas, and Ida, for example, and they come up with nothing, I still didn't overpay for the company. If they drill any other target they find here and they miss, I still wouldn't be overpaying. Even if you add dilution, let's say, let's say they raise 20 million. We have the market cap go up to 100 million. And they miss on everything. I'm still underpaying, in my opinion, a lot for Barsele. Significant discount to already what's here. That is, I mean, when you think about it, that is the risk reward you really, really want. Then we can add the fact that Sweden is a first world jurisdiction, is getting more pro-mining, as I just showed. These are absolutely massive anomalies, and the threshold for success here is like ridiculously low. I mean, I think the G Mining PA, for example, why that came in at $936 million is because they have to build a bunch of infrastructure. This area, all the belt here, is like extremely good infrastructure, lowest cost in all of Europe. There's literally down here, I think, is a plant already built. You have, exactly. Around here is the Svartliden plant. So that would be, basically here, I think. So there's a plant here. So it's like, and that they built that plant based on 370,000 ounces of production. So if we find 500,000 ounces here, you could build a mine on that, just truck it to the Svartliden plant. And that would actually be of value. If that's in a remote part of Canada, forget about it. If that's in a remote part of Guyana, forget about it. If this is here and maybe becomes a satellite deposit in Barsele, I mean, that's what I really hope could happen. That's like, let's be a bit conservative, even though you're kind of speculating by definition. But let's say this is not smoke from a 3 million ounce plus deposit. This is not smoke from a 3 million ounce plus deposit. This is smoke from a 1 million ounce deposit. This is smoke from a 1 million ounce deposit. If you have 1 million ounces, let's say you can truck 100,000 ounces per year from this, 100,000 ounces a year from this. You build a production hub, a production facility up at Barsele, which would be the big one in that case, and that could churn out 170,000 ounces. So you have three spokes, one hub. That's 370,000 ounces of gold per year. That's kind of, that's a really, really big mine. Especially in this day and age when we're finding less and less of the, bigger mines. So yeah, I mean, I think from a intrinsic value, like a value investing, this is one of the most absolute no-brainers I have ever seen in the gold space. And of course it happens when the sector is the most brain dead it has probably ever been. I mean, listen to any of the, Rick Rude's, Ross Beatties. They have never seen anything like this. So if you get if this Barcelona alone is worth $1 billion today, you can buy 45% of it. I mean, at spot prices, I think Barcelona is worth much more than $1 billion. But let's say $1 billion. So that's 450 million belonging to First Nordic right now. You can buy that for 80 million, and you get a free option on at least 2 absolutely massive soil anomalies, where the threshold for success is ridiculously low, in one of the best mining jurisdictions in the world in terms of costs. Find me another case where a company has 45% of a tier 2 deposit, these kind of soil anomalies with excellent infrastructure in a first world country. I don't know a single one. I mean, I'm not going to name names, but I know a few companies that have similar market caps than First Nordic, and I would say are not nearly as good. But that's the market for it. That's why I love this sector, because I think it's absolutely, ridiculously stupid. I mean, it's almost too easy in a sense. When this sector is hard is when valuations are high and you kind of need to be correct. When most of the potential is priced in and all of that, where it's like you don't actually get risk-free exploration upside, where it's like, if this doesn't work, the stock is going to take a 50% haircut. That's a hard environment. This is an easy one, where it's like you get to swing at massive targets with no risk. It's just ridiculous. But it's like, consider me biased. I own a shit ton of First Nordic, because again, it's like it's one of the most remarkable risk rewards that I've seen. Not that I guarantee. I mean, an asteroid could hit Sweden, I guess, and all that. So it's not like it's a guaranteed win. It's just that I think there's a very high probability that one will make money on this story, and there's a possibility that one will make a lot of money on this story in the coming years. That's it. Blue sky scenario obviously would be that they actually find 1 or 2 significant discoveries. More, all of a sudden you have a $3 to $5 billion mining camp here, and you bought it all for 80 million in 2024. That's the blue sky upside kind of scenario. And not to get, yes, there are even higher up blue sky scenarios, obviously, with gold going higher, and they harps and turns out to be a 5 to 10 million ounce deposit alone and stuff. But it's like, okay, not to be too arm wavy, we don't even know if there's 1 million ounces here, but you get my point. I hope that it's like, for all intents and purposes, this is risk-free upside potential. And that might, people sneeze at that, obviously, because the market cap is not pricing in anything of this. It's not even pricing in Barcelona. But that's why, it's very hard to be overpaying for anything in this sector right now. And the only job as a value investor is you buy something cheap. Well, you try to be the cheapest stuff you can find, and then you just wait. However long it takes for the market to get irrational again, and maybe irrational to the upside. That's it. You buy cheap and then just wait. That's basically what value investing is all about. Headwater. I talked about First Nordic and Headwater today on K Report. Very interesting situation here. Picture this. I think, let's see here actually. 4th of September, Headwater announced that they acquired 2 additional 100% owned epithermal vein projects in northern Nevada. This is a company with 34.2% insider ownership. Newmont was the largest shareholder, because I'm going to get to that. That's a legacy stake from Newcrest. Newcrest originally did earn-in deals on 4 different projects. I think they had maybe 10 or 11 at the time, so close to 40% of their projects got Newcrest interested. That says something about the team's ability to pick up good projects. They stake 10, 40% of them get picked up by a major, an earn-in. Okay, how many juniors do you know that would get Newcrest interested? Like 0.1% of juniors? 1%? They had 4 projects that Newcrest was interested in. So they have, obviously, from a statistical standpoint, off the scale staking ability. They have a very good geological nose. So whatever these guys are staking, and you can see the people involved here, and you can see the experience. So whatever these guys are staking, that has potential. They are probably, statistically speaking, probably one of the best staking, exploration staking teams on the entire planet right now. So they pick up 2 projects, 100% owned, no royalties, and this was September 4. Let's see what this was 13th. That was actually the day before. And okay, so 4th. Was this on a Friday or what? Saturday? Anyway. Okay, so before the news, they closed at 20 cents. Now, today, they Headwater announced a strategic investment by Integra Gold. So Integra is getting in for a 9.9% stake. So they just overtake Newmont in that case. And they came in with a 15% premium at 22 cents. And they bring in $1.54 million. So I think they say they have, $4 million in cash right now. So since they came in with a premium, with no warrants, the enterprise value went down. The market cap at 18 cents is whatever. They got cash in at a premium at 22 cents. So actually, before the news, it was trading at 20 cents and had an enterprise value of 9 million, I guess. No, this is the new market cap. I don't know, let's say 10 million or whatever. The enterprise value has gone down. The company's cheaper now than before they staked 2 additional projects and got their entire portfolio and case validated by Integra Gold, who put in money at a premium of 22 cents. Again, that's why the enterprise value actually went down. That is remarkable, isn't it? You add 2 projects, and in light of their past history of staking success, aka being able to get a major to earn into 4 out of their 10 projects they staked, they would have abnormally high, one should put an abnormally high speculative value on those projects that they stake. So obviously the value in Headwater Gold went up at face value. No question about it, when they staked 2 additional projects. We don't know what the actual, nobody knows for sure what the value to put on those projects, but it's not zero given, again, the resume of the team and the human capital involved here. And then again, you have a second larger company come in, vote of confidence, validation, which is going to become, obviously makes it easier for Headwater to actually fund stuff. So a lot of positives comes with another major gold company deciding to put money into Headwater, and the stock is cheaper. The enterprise value went down. Do I need to continue with these examples just to show what a friggin' joke this sector is? People complain about this sector is so hard because prices are down, whatever. This is like stealing candy from an absolute baby. This is beyond being an insider. You can pay less after 2 positive news releases are out. Should that even be possible? No, in a rational market, this obviously wouldn't happen. That's my point. This is a friggin' joke. You have no idea. Anybody who does not appreciate what a ridiculous situation this is for any value investor / speculator, or however you want to see anyone dabbling in these juniors, it is absolutely ridiculous. It's like up is down, down is up. You can pay less to get a better company. And most people just bitch about how low the prices are, and most people sell out. I mean, don't come crying to anyone in whatever, at 1 year, 2 years or whatever, that's like, oh, couldn't make any money in juniors, they sucked. It's like, yeah, if you sell these juniors, you deserve to lose. You really do, because you have no idea what you're doing. My problem is that I don't have enough money. This is, in my opinion, this is speculative though, because it's earlier stage. But for this price compared to most pre-discovery, well, it's not even a pre-discovery junior, because the Spring Peak project, which is being drilled right now, is a discovery already. Question is, how big of a discovery will it be? But compared to most pre-discovery juniors, this is probably, in my opinion, a no-brainer. There's a lot of cheap pre-discovery plays, but Headwater is one of the best early-stage exploration stores that I know of. And First Nordic has kind of risk-free exploration. It's a higher market cap, sure, but they have a lot higher margin of safety. 2 absolute no-brainers. I don't have money to buy all these. 4,000 shares traded. It is absolutely remarkable. It's like a handful of people. Sometimes you might be the only person in the world that thinks it's a good idea to buy some of these. If I had money, I would, again, my problem is that I have, 10, 15 no-brainers and a lot of buys. So I would be spreading myself out, and that might be what we're seeing. But it's when you think, it's absolutely ridiculous. If this was 2016 and a junior has a active earning with Newmont in Nevada, and they just got another mid-tier to put in money at a premium. First of all, the stock wouldn't be even, Headwater wouldn't be even close to this. I would not be surprised if this was 2016, Headwater would already be at 60-70 million market cap. Just based on sentiment. You cannot underestimate how outrageously volatile this sector is. The exact same company at a sentiment high, this could trade for 60-70 million easy. At the worst sentiment low, the most depressed junior sector there's been in 30 years, you can have the same fundamentals trading at 11.45 million. Well, this is not including the dilution, I guess. Let's say 13 million. It is that is how ridiculous this sector is. Yeah, these are just and I took I played around this weekend. I have talked about Integra / Florida Canyon, that their proposed merger. They're supposed to merge in if the merger goes through, it's late October, I think. And until then, I think it's there's or let's start with this. If I just use, this is the combined market cap. I don't think, it's not a fully diluted, but I think this is the correct market cap post their raise that they just did when these two entities merge. Then you will have the Florida Canyon mine coming from Florida Canyon, Delamore mine, which is already in Integra, and Nevada North, which is already in Integra. So at $1,700 gold, Delamore has an NPV of 426 million. Nevada North has an NPV of 420 million. Florida Canyon has, well, according to their base case, which is $2,200 gold next year, I think, and $2,100 gold in 2026 or something. So it's below spot and trending down, whereas spot is obviously at 2,500 and has been trending up so far. So I would say this is very conservative, just based on an NPV value. And I put 50 million, which I think is very low on all the exploration potential. I mean, this is like, I mean, Delamore is just pricing in obviously the resource, Nevada North, the resource, Florida Canyon, the current resource. All of these, I mean, at Delamore, there's a bunch of extra sulfides there. Nevada North, very low hanging fruit targets just outside the resources, especially at Wildcat. And then you have, I think, seven strong project portfolio of like exploration assets, including Red Canyon, which is a Carlin discovery. So I just put 50 million on all the exploration potential across their, 10 project portfolio, which is ridiculously low. And then I come up with a total value of, on paper, of 1,069 million. And the market cap right now is 200 million. Conservative base case. Much lower than spot, and it's at 1,069 million at face value. This is the higher case when I used I actually didn't change. Florida Canyon should actually be at, I think, 300 million. I think that's what the NPV is at, around $2,500 gold. So if we take a more optimistic scenario, we take like spot for Florida Canyon, because that's actually in production, and the spot price is where the spot price is. We use the economics for Delamore, assuming a gold price of $2,000 gold, which is $500 below where it is, and the same for Nevada North. So this is a slightly more optimistic scenario, but still lower than spot at these and at spot at Florida Canyon. And then I assume exploration potential at Delamore worth 100 million, exploration at Nevada North worth 75. And I mean, these are not huge numbers. It's just that this sector is so freaking low that it looks absolutely ridiculous. Like, oh, exploration potential for Delamore is half the market cap. Yeah, I think this is like legit, and I think this is low. But it just looks crazy because the market cap for the entire thing is so crazy. 75 for exploration potential at Nevada North. I think this is, not shocked if this comes in Wildcat. I think they're gonna prove up much more at Wildcat. Florida Canyon just used 50 million. They believe they can find like 300,000 ounces more. I wouldn't be surprised if that ends up being worth at least 50 million. And then the portfolio, and I just used 40 million. But that's for Red Canyon and Ocelot and Cerro, whatever it's called. Then I come up with a total value of $1.866 billion. And you can buy this entire thing you can buy all of these projects, all the potential, for 200 million right now. 200 million is less than what Florida Canyon's at face value economics are at current spot price. So one could say that you're paying you're getting a 33% discount on Florida Canyon, and you get 2 larger projects for free, all exploration potential at all 3 targets for free, and you get an entire pipeline of 7 other projects absolutely for free as well. I mean, it's like, just thinking about it, it's like absolutely ridiculous. Now there are obviously, again, there's risks like, oh, what if gold price crashes and Florida Canyon, which is not a superb mine, what if that makes a loss or something? Is that possible? Of course, anything is possible. This is not saying that, oh, 100% guarantee you're gonna get close to a 20 bagger in Integra Resources post merger from these levels. No. This is suggesting something about the upside if the case plays out well. That's what it does. So how often would you need to be right? Well, almost like 1 in 20 in that case. That's the thing. The prices are so cheap right now that if any of these actually turn out okay, let alone turn out really good, you're gonna make a lot more money than we should have ever been able to do, because the prices should not be this low for these juniors. So in my book, Integra looks like an absolute no-brainer, where I'm basically almost paying for a mine at spot price and get, I don't know, 7-8 million, I think like 7 million ounces of US gold for free, plus all the exploration potential. So I'm buying an entire portfolio of heap leach gold projects in the US for nothing. Again, I have never seen anything like this. It would be totally different if gold was at $1,300 right now. Then I can understand, well, Florida Canyon would be losing money, so at face value, the business would have negative value. Yeah, just something to think about. This is one of the new inclusions in the hodl folios. Because I see them, I mean, they kind of have a growth plan or development plan over the next 5+ years. And that's just for the developed assets. And I expect them to find a lot more ounces at these projects than we know right now. So maybe it's like, yeah, let's put it like this. If you held Integra for 5 years, I think you're either going to be up a lot or down. And I can see, it's not too hard to imagine why it could go up or should go up. Juggernaut Exploration, they recently put out a new, I don't know if I've covered this, but so they have, well, actually, let's go to where are the news from? So we know that they had SK style, I mean, that's VMS style, over 700 meters, 10 meters thick on average, the intercepts with sulfide mineralization. We don't know what the grades are. But there's some obvious sulfides in there that could be carrying grade. And they also announced on September 6th, Juggernaut drills extensive sulfide mineralization, averages 7.32 meters wide over 700 meters, that remains open on the 100% controlled Bingo property. So they have encouraging visuals from 2 drill campaigns at 2 different projects. One VMS in BC, more like, let's call it SK style. Even though it's like, I'm not saying there's going to be an uber bonanza stuff like SK, let's say VMS style. And then they have 7.32 meters of average mineralization in a target that looks kind of like the Shorebed zone, which Goliath Resources is drilling right now. I have no idea what the assets are going to show. I would say these are encouraging visuals. If we're really lucky, they might kind of confirm 2 new discoveries, or semi-new, I guess. I mean, they've already hit pretty good numbers at Bingo, especially. I think the market cap is around $10 million or something. Yes, early stage exploration, yada yada. If they hit, they would need to raise money and all that. But hey, let's see. I mean, this is one of those where it's like, okay, base case is that this does not become a multi-bagger. They have not made any significant discoveries. But there's a chance that they might end up making 1 or 2 significant discoveries. And from these market cap, obviously, there's a lot of upside, especially if we go into a higher sentiment environment. So I'm not betting the farm on Juggernaut. It's one of those many that I really think are cheap, but it's still high risk, high reward. This is much higher risk, higher reward than Integra or First Nordic, for example. So I don't have nearly as much money in it. This is one where it's like, if this totally bombs out, not going to affect my portfolio that much. If they do end up finding something remarkable, there's obviously quite some upside potential from around 10 million market cap. So who knows, maybe this small position will actually end up contributing in a pretty decent way to the portfolio. And I don't need many of these to turn out, show success, let's say, to pay for. I mean, if I had, I don't know, 20 Juggernaut Resources or Juggernaut Exploration in a subset of my portfolio, maybe 5 out of 20. If 5 out of 20 actually ended up being successes, that segment of the portfolio would show good returns. That's the high risk, high reward portion of things. Goliath, I recommend listening to this interview. I mean, Goliath, I've talked about this, I talked about this on K Report. What's enticing with Goliath is that I think they're fully funded now to drill up to 36,000 meters with 8 drill rigs. Meaning that, okay, assuming they've closed all the financings, there's going to be a shit ton of assays coming, and we already know that so far a lot of the holes show visible gold. So imagine if we can just fast forward 6 months. After 36,000 meters are out, and in between there's no threat of a raise because they're fully funded and then some perhaps. Is there a chance that Goliath Resources has proved up something more significant, let's say, to warrant a higher market cap and would get that even in this shitty market? I think there is I would bet actually, I would think there's a higher than 50% chance that that's going to be the case. That assuming the sentiment does not get a lot worse, I would expect Goliath to trade at a higher price nearing the end of the assays from this very extensive drill campaign. And it's not like they have margin of safety at face value right now because they don't technically have a resource and all that. But we already know they probably have quite a lot of gold because they've already hit in a lot of holes. So we know there's something there. The question is rather how big it is. If this turns out to be an absolute monster, yes, then I think this market cap we're seeing right now won't even come close. I'm going to talk about a few special situations, let's say. Ascot Resources is another one in an unfortunately somewhat long list of disappointing developer stories. So Ascot put their mine into production not too long ago. They apparently raised 34 million in July. Second quarter results in August. And then they announced 6th of September, Ascot announces care and maintenance of operations in order to focus on mine development. So they're pausing the production. They're pausing the mine. They're behind in development. They can't really fill the mill as far as I understand. The reaction by the market, low of 40, oh Jesus, okay. Yeah, what is that, like 60 plus % haircut in the share price of Ascot Resources. This is just another reminder that mining is very difficult, and typically in a lot of developer stories, I don't really see the risk reward. But again, that's easy to say in hindsight. I didn't predict this. I wasn't short Ascot. I'm not gonna tell, people were stupid too. I actually held Ascot for a while. I mean, I talked about them when they got really cheap. I think around this level or something. Then it actually ended up trading up, and then I value shuffled out of it because I found something that I thought was cheaper after the rise. So I don't hold any shares of Ascot right now, and it's kind of with some situations like whatever. I mean, Victoria Gold is an obvious one recently, where it's like they shit the bed and went down, and in my opinion, few could foresee that. It just shit happens. It just shows that the mining sector is a very hard sector, and that's just, I mean, another reason why I think metal prices are bound to go higher, because it seems the sector is undercapitalized. We're not getting production. We're not getting projects into production. We're not getting projects permitted. There's not enough skilled labor around. There's not enough capital to make sure that the companies have enough money to apparently, again, I don't know if this is a skill issue or money issue or whatever. It's just damn hard. So at this point in time, I mean, I'm always attracted to volatility. When I see something just get slammed, it's like, typically there's an overreaction, so there might be an opportunity. In Ascot's case, it's hard because, again, it's like, you can't, in my opinion, you kind of have to have a sense of what has gone wrong, how much that is going to cost, how easy it is to fix, and all that. So you kind of, I think, need to have quite of an experience from mining engineering to really appreciate this story. Otherwise, you could just say it's like, oh, I'll buy some now, and I mean, if things turn around and this becomes a mine, or it gets back into production and it works out, this might be a whatever X-bagger. I'm not ruling that out at all. I just don't see how I have an edge in this particular situation. So as it stands now, I have not bought this dip. I have no idea if I will. Maybe I'll change my mind in 5 minutes from now. But right now, I it's like, compare that to some of the other stories I've talked about, where it's like super easy to see the actual bet and super easy to see the risk reward. Here it's like, well, if things go really bad, could they even go bankrupt? I mean, that's not something you really like to see. Yeah, so I mean, I'm just trying. It's like, I think we should pick our fights, if that is a good way to put it. I don't see me having really an edge here. I mean, one of my edges is being able to sell during crashes, or buy during crashes, when everybody's scared, and there's apocalypse type comments in the sector or in a specific junior. I am very good at buying low. In this case, I don't, it's hard for me to get really greedy because I don't fully understand what the problem is or what the value is and all of that. So until further notice, I think I'm not gonna. And if I would buy again, since it's not a high conviction case, I might, I don't know, put $1,000 in it just for fun to see what happens. I mean, I do that on occasion. Amex Exploration. Another one that got slammed recently. This is not good PR for the sector. Obviously, this is just basically punishing, well, every investor. But like, this stuff is punishing retail investors. So they, at the time, especially if they are like me, when they're all in, it just means that they have less money to go around, in a sense, because their portfolio went down on paper. Leaves a bad taste in people's mouth. Probably people will be more reluctant to buy going into resource updates, for example, because they have this fresh in mind. Yeah, so I mean, just another, let's say, hurtful memory. It's like a bad reference point, which makes people less likely to take risk because they got kicked in the teeth in this story. I think it actually brought down Ascot Resources as well. It's rebounded a bit, but okay. So there was like a bit of panic selling on the back of, because I think a lot of people believed Ascot was going to acquire Scotty. But like, one thing to note here, of course, is that does. Oh, okay. That was for, yes, Scotty related to Ascot, not to AMX. But on the topic of Scotty, actually, might there be, did the value change really for Scotty? Well, it obviously looks very hard for Ascot to be acquiring Scotty Resources anytime soon. That's for sure. At the same time, did anything really happen to the project? Just because Ascot is kind of failing right now, does that mean that Scotty will fail? That their deposit is no good, or is like, if you know what I mean? I wouldn't say not necessarily. I mean, I don't think there's necessarily anything really wrong with the Ascot Resources mine, for example. It might just be lack of capital or lack of skilled labor or something like that, that the mining team wasn't really, experienced enough. So maybe, put Ascot in the hands of another team, more capitalized, kind of what West Red Lake is doing with the old PGM, pure gold mining assets at West Red Lake. Maybe it's one of those things, needed more capital and needed some other people that maybe had a better grip of how to actually mine. And maybe Ascot would be a fantastic mine, and maybe they will, the ones that, let's say, buys Ascot, they would end up buying Scotty. So from a long-term perspective, I'm not, who knows what the value is, but this might have been an opportunity as well. It went down to 14 cents. I mean, it's not a lot higher now. But I'm trying to just show you that like volatility typically hides opportunities in one sense or another. Because right now, as we've seen, as we've seen with both AMX and Ascot, if there's a negative surprise, you get your teeth kicked in. As we saw in the Headwaters case, if you have positive surprise, you don't get anything for it. So it's immensely rigged, right now at least, against a holder. Existing shareholders. I'm always 100% invested. So right now it's rigged against us holders, because we don't get much for success, but we get kicked in the teeth in terms of disappointing whatever. Still, it still opens up stuff for value shuffling, because let's say I owned let's say I owned Amex, and I think that stock is worth $2, whatever. It went down to 1.12, or let's say, well, I don't know. I didn't own it before. I'm not just gonna come up with a number. Let's say we believed it was worth $3, and there was a 50% upside from $2. Okay, so I saw like 50% upside. This news release happens. I get kicked in the teeth, down, let's say, almost 50%. And I take down my intrinsic value in light of this new resource estimate. But let's say I go from $3 in intrinsic value to $2. So I adjusted down by a friggin' dollar, but the share price went down to $1. So all of a sudden there's 100% upside as I see it. So it's actually, if I hadn't owned it at any time, this would actually today, for example, be a better opportunity than when I had it before the flush. So I mean, if I was a holder, had high conviction, AMX sells down, so now I think the upside has doubled from this new level. So I take punishment on my previous position. The case just got a lot better. I triple my position size, for example. And at the end of the day, assuming I'm right, I'm going to get 100% on that, and that's going to pay for the losses, paper losses I had from buying at $2, for example. Assuming no negative surprises down the line. So I mean, that's the thing. What I've been trying to kind of relay, that volatility is not good or bad per se. It's what we do with it. If I bought here, sold down here when I should be buying, I made a mistake. if I bought here and shouldn't even have been buying, I bought a mistake. But maybe I buy here and that might be a good choice. I mean, it's just one has to have an idea what do you see as the intrinsic value and all of that. So yeah, I have actually put in some stink bids in this. I think I'm already red actually. I think I bought it like 15 cents. Not a huge position. I plan to. I think I'm going to be talking to AMX on later in this month when I think they're coming to Stockholm for the Nordic Mine conference. I think that's what it's called. So I'm not. I actually looked up and I think they spent around 100 million drilling this. So that's 100 million of previous dilution. And now you can almost pick it up for the value of the sunk costs. So which begs again the question from a pre-discovery standpoint. If you can buy success that cost 100 million for almost 100 million, how many pre-discovery stories are good if you start at 10 million and you actually need to... I mean, if you would be lucky enough to find what Amex, let's say, have found, it would still cost you 100 million to prove it up. That's a lot of dilution. In this case, you can just skip that, buy it at sunk costs, and not have to go through 3-4 years of drilling, for example. This is why I think the real opportunity right now is not in the major producers. It's not typically in the pre-discovery juniors. It's mostly in the advanced explorers developers. Because there you're buying kind of stuff at below sunk cost and at times way below book value, which would cost a junior much more. I mean, let's take Integra, for example. Let's take Integra. Okay, spot case is even better than it is now. But let's say this is what you're buying. Well, let's not even look at that. Let's just look at sunk cost. What would it cost? How many years would it take to get Florida Canyon delineated, permitted, up and running, funded, and all that? Basically, a mine. How costly would it be to get Florida Canyon? How costly would it be to start from scratch at Delamar and prove up whatever they have, 3.5 million ounces or something of heap leachable stuff? They're still, they're already a few years into permitting, for example. And then how much would it cost to prove up what they have at Nevada North, including a PEA? In Delamar's case, they have a PFS already. And I don't know if they've done a lot of permitting here, though. But it's like, what would it cost if you started from scratch? You had all these projects. You had the Florida Canyon land package, you had the Delamar land package, you had the Nevada North land package. But there was no drilling at them. No drilling so far. You only had them as early stage exploration projects, which ended up having what we see now. How many years, how much would it cost to prove up 3.5 million ounces at Delamar, to prove up, 1.7 million ounces or whatever they have at Nevada North, and prove up and build a mine at Florida Canyon? Now we can buy all of that for 200 million. I would think that it would cost a shit ton more and cost a lot more than 200 million to do all of this from scratch. Prove up all this. That is the beauty of, and there, in my opinion, where the big risk reward opportunities are typically in this sector. But I'm not counting out. Again, it's like Juggernaut, even though it's not a huge position by any means, but still, it's like I'm not totally staying out of exploration stories. But they have to be really good. I mean, they have to have a shot of finding something like tier 2 or better. Otherwise, I wouldn't. It's like Headwater. I mean, obviously tier 1 potential since Newmont is involved. Otherwise, I wouldn't really bother. But yeah, so Amex, I bought a bit, almost as a reaction, because I have a hard time seeing that the value of the company actually went down 50% with this resource estimate. I might be wrong, but I would be surprised if this is not, undervalued. But maybe I'll, whatever. I might be selling it tomorrow. It's like I don't know. It's not a big conviction story. I just put a $2,000 in it or something like that. So this is not going to make or break my portfolio, even if it went up to $50 per share or down to zero. Luca Mining, I think this is an interesting one right now. Same with Amex, basically. Had it on my watch list. Watched the Rick Rule interview with them. Seemed to have a pretty interesting team involved, like ex-Lundin Mining, I think, and stuff like that. What I think is interesting is that, I mean, let's say the trend was up, the chart looked good, everybody was feeling kind of great, they have growth plans, yada yada, and all of a sudden, quote, they put out a news release, announces private placement of up to approximately 8.55 million. I think it's a life financing as well, meaning that as soon as this closes, you can sell. Half a warrant at 0.60. What's the share price? Ooh, that's a very low warrant as well. Obviously, I think, I mean, this is gonna, I mean, as it did, I mean, it was lower than the share price. It's live financing. So as soon as somebody puts money in and it closes, you get the shares and are able to sell immediately. So anybody who puts in has the option to, as soon as this closes, sell their shares, and they still keep half a warrant at 60 cents per share. This did not make people happy. There's obviously pressure down to 45 cents, and we, as you can see, surpassed that. I assume that's because people think that, okay, maybe it's even worth selling at 42, buy back at 45 in the placement and get a half a warrant. And then you can sell later on, whatever. So this is going to be punished. This is probably going to have a lid on it for some time because of the live financing. But okay, let's fast forward. It appears to be a good team. I don't know exactly what they need the money for. I hope it's not because everything is like, oh, it's going below expectation. Let's say, because I think they have a, as far as I understand, they have a pretty good, pretty solid growth profile. If we fast forward 12 months and this capital was enough to get them to ramp up production by whatever, and they're actually cash flow positive, let's say, this might look quite cheap. But then again, I ask myself, okay, would you rather buy Luca than any of these? I mean, at face value, they have like 2 mines up and running. I think they had a goal of like maybe even up to 200,000 ounces of AU equivalent production per year in the next year or something, which obviously makes this market cap, even including for dilution, look ridiculously low, assuming they make any money on it. Is there a chance could become a 500 million market cap company one day? I wouldn't rule it out of the question. Is it such a no-brainer? Just thanks to this little hiccup here or speed bump, that it's like better than any of the other stories I've talked about. For example, my existing holdings. Like, no, I don't see it as that much of a no-brainer. The special situation here, I think, is that assuming something has not gone terribly wrong, and this is just a very unfortunate private placement, kind of like, line one situation, assuming the base case plays out or they actually get, have solid cash flow and get to growth or whatever, obviously this could look very cheap in the future. And we know why there's going to be pressure right now with the warrant clippers and the live financing. So this is probably artificially cheap right now, I would think. So let's put it like this. I would not be surprised that I actually bought a few shares. Again, tiny position, mostly for fun, so far at least. I wouldn't be surprised that within 2 months I might be up on the, made a bit of money. But it's not one that's like, oh, Jesus, let's put 10% of the portfolio in it because it's so clear cut that it's superb risk reward or anything like that. But these are still interesting cases, I would say. Special situations. There's volatility for some reason. Okay, but why is there volatility? Okay, news. Okay, what is the news? Okay, negative reaction. You're gonna see some overselling, obviously, because sentiment is shit and all of that. Momentum traders, stop losses, yeah. So we know that why these can go much lower than perhaps they should for the time being. If we fast forward, okay, when the dust has settled, where does the company stand? Was this not an absolute disaster, but is this such a big deal that it should be down this much? Does it affect the case that much? You can say the same with AMX. Was the MRE that bad that basically half the market cap disappeared? Half the potential intrinsic value in AMX got cut in half? I don't know. But I wouldn't be surprised if that might not be the case. And I guess what I would touch on, I'll touch a bit on G Mining, I guess, that they did their study. It wasn't that impressive at face value. Obviously, there's another company, G2 Goldfields, right next door, so they might end up buying that, who knows? And all of a sudden, it's an even bigger project, and it's a strategic asset, it's a tier one asset, and like, this works out well and all that. Just at face value, that PA was not that impressive. But they also announced G Mining Ventures to acquire the Central Gold project from BHP. Don't know exactly what it cost or anything like that, but this is obviously empire building. They started with Tocantinzinho near Cabral Gold. They basically got that into production, I think. Declares commercial production. A few days later, PEA, not too impressive, but they've already acquired Reunion Gold, which has the Oko West Gold project, which they put the study out on. But they're not done, so they're buying another gold project from BHP located in Brazil. I love this. I mean, these are mine builders. They probably have maybe the best mining building team in the space, and they have that as an internal edge. And they're just acquiring projects. They started with one, acquired two more just now, and might still go. So who knows what G Mining Venture could be valued at one day. I mean, let's say Tocantinzinho keeps on delivering. They get a Reunion Gold project, the OK West project. They build that, or they buy G2 Gold first, or whatever, and then they put that into production. It's like a 500,000 ounce producer. So they have 200 from Tocantinzinho. They have 500 from Oko West or G2. And they, I don't know, get this up and running. It's like 150,000 ounces. So that's like 850,000 ounces, let's say, since they're such good mine builders and hopefully good operators. Imagine like 850,000 ounces of production per year. Maybe gold is at $3,000-4,000. What could the value be for G Mining Ventures after they're, progressed, like, let's say 4 years more into their empire building and advanced, maybe picked up some even more assets. So this is a world-class team, appears to have solid, at least big assets, know how to build mines, know how to grow, know how to put mines into production, obviously ambitious, as we can see. This is actually one that I can see is like probably pretty good hodl folio candidate. Mostly because the skin in the game, the people involved, and all of that. But you're not going to get a 10 bagger that easily out of this, so that's one thing. But you're probably not going to lose money really on it either. And there's obviously apparent upside. I mean, at face value, even though this wasn't that impressive, at what was it? At $2,500 gold at spot, the project is worth more than the current market cap for the entire company. So you can see there's some upside potential there, obviously. But I'm not jumping at this one. Maybe one should. I mean, again, if one is not a good stock picker, if one does not want to buy the ETFs, this is probably actually one of those cases where it's like 5 years from now, I wouldn't be totally, I don't know, surprised if this is valued at 8 to 10 billion or something. That's a solid return over that time. It's just that, yes, typically we don't get greedy enough, but we're never really greedy. I mean, look at this. It probably looked overvalued relative to the average shitco all the way through, and that hasn't stopped this from being one of the best performers in the sector. And I mean, they're obviously not done yet. So yeah, I think this, even though I don't personally own it right now and don't have it in the hodl folios, I think this is one of those candidates that's actually probably a good pick for a hodl folio, where you want to make sure you're not making a mistake, if you know what I mean. You stick with the best people possible. If they mess it up, there's probably gonna be reasons for that is out of maybe the management's control, if you know what I mean. Something happens geopolitically or something. But at the same time, you're probably, I mean, yes, there's gonna be probably shitcos that outperform this, but who knows what shitco? Who knows how many shitcos you're gonna lose on before you get, find, how many losers per winner, if you know what I mean. I mean, if you had 20 G mining ventures in your entire portfolio was 20 different G mining ventures, I mean, you're probably for sure gonna make money. It's like not too much to think about, I think. Yeah, that's about it. Covered quite a bit of stuff. I always have much more stuff that I think about, and I'm always doing some notes and yada yada. Anyway, hope you enjoy this update. Hit the thumbs up button if you like the stuff. Always consider me biased. Again, it's like, don't buy anything just because I like it, or sell anything because I don't own it, or not buy it because I don't own it, or anything like that. We all have our different tastes, and it's like, buy something you're comfortable with. Buy because you see why you should be buying it, if you know what I mean. You have to have a case yourself, and you have to understand the risks yourselves. Because otherwise you're always going to end up buying anything high, selling low, or basically that. Again, consider me biased. Assume I own shares of all companies mentioned, even though I don't. Some are banner sponsors. Not investing advice. Not a recommendation to buy or sell. I don't share your profits or your losses. Don't invest money you cannot afford to lose. Diversify, especially the less you know. You get the drill. It's a marathon. We want to get rich slowly, in a sense. Because let's face it, I mean, the ones we see as, I think there's 100-200% upside in whatever stock. When sentiment gets going, that 100-200% is going to turn into 300-600%. That's just how it is. But let's aim for the solid returns and let the sentiment be the kicker, if you know what I mean. That's going to be somebody buying high, obviously, and hopefully that's not going to be us. Thanks for listening. Bye bye.